Hello everyone. Welcome to the 10th video by Aurivox Financial and the 4th one in our investor knowledge series. And today we are going to be talking about a product that is not really well understood by even some of the more informed investors. And the reason being, it is not the most commonplace kind of product. So what are we talking about here? Well, this is market linked debenture. We'll try and break this down into a very simple and easy way of understanding so that anyone watching this video is able to make some sense of it. How does it function? Well, as the name itself suggests, it is a debenture, which is a fixed income bearing product, which is linked to the performance of a certain market or an underlying instrument. What could be such an instrument? Well, it could be Nifty, it could be Bank Nifty, it could be gold, perhaps silver, or some other instrument. And the performance or the returns that you are able to generate is linked with not only the underlying debenture but also the performance or the price movement of this instrument. So we deal in particular with Incred, which is one of the large financial conglomerates in India, and they or their subsidiaries Pocketly are the ones who issue these products. How will it work? Well, typically market linked debenture comes with a duration of between 3 to 4 years, and the minimum investment value here is around 5 or 10 lakhs. What will happen is, once you invest this 10 lakhs, that will 70% of that typically is used to hold a debenture, which over that 3 or 3.5 years will come up to become 100% of the value. So by doing this, your principal is protected. Almost all of these products which come are principal protected, and then they also give you the upside of the market. One of the product which had come recently had a Bank Nifty sharing, where there was around 1.5 times multiplier of Bank Nifty. What that indicates is, if Bank Nifty falls, it completely crashes over 3.5 years, you will still get your money back. The principal comes back to you. However, if it does well, let's say Bank Nifty moves up by 50%, then using this 1.5 times multiplier, you will get 75%. Similarly, there was a gold linked debenture which had come. Again, principal protected with say 1.4 times multiplier, but that was capped at 70%. So the maximum return that you can get is 70% over that 3.5 year period, right? Or there are some which come with a minimum guaranteed return as well. This month's issue from Pocketly in fact had a fixed 40 or 42% fixed return over some 3.5 year period. And if Nifty does better, say Nifty gives 70% return over this duration, then that 70% is what will be given to you instead of 42. That's how it works. How do they generate this return? Well, one, I said the base is covered, like the underlying what is going into debenture, that covers your principal protection. With the remaining say 30% of the amount available with them, they deal in options. Now, options are a very complicated product. If you don't know how to deal with them, then definitely you should not look at it. But then they have very, very sound teams working on it. They have their own proprietary desk, in fact global teams who are working on this product, and they look after the strategy, the execution of these options. And that's why they are able to generate really big returns over this period, because they know the fund is available with them for some duration, so they can take these strategies. Now, should an investor look at this product? Well, there are a few things to be kept in mind before you make a decision on this. Firstly, there is the tax angle. So what happens with these MLDs is whatever return is generated is added back to your tax slab, and that is where you need to file returns as per whichever tax slab you fall in. So that is one consideration to be kept in mind. The second being, they are not the most liquid product. So if it is issued for 3.5 years, you should keep in mind that it would be best in your interest to hold it for the entire duration. Because if you want to offload it in between, then you will really have to sort of find a buyer and give it to them. On the secondary market, they are not the most liquid instrument. And the third thing to be kept in mind is the credit risk involved. Like with any other fixed income product, who is the one who is issuing it? Whether it's a bank FD, whether it is a corporate bond, a debenture issued in this manner, whoever is issuing it, are they sound enough to run the business profitably and to be able to repay it back? So these are broadly the considerations that you need to be keeping in mind. However, if you feel that you have good investments in other products, you would like to maybe diversify in something like this, then definitely yes, Aurivox has this product available with us. You want to know more, then we could connect on a call. We could also maybe get Incred team to talk to you if that is so required. And you could connect with us. You could look up our website, which is www.aurivoxfinancial.com, and our contact details are available there. You could get in touch with us to evaluate this product further. Well, as of now, that's the end of this particular episode. We thank you all for watching patiently, and we hope to see you in the next one. Thanks again.